afternoon. On behalf of Siam City Cement Public Company Limited, I would like to welcome you to Set Opportunities Day, third quarter 2023. We appreciate your time and interest in our company performance today. And I have the pleasure to introduce our senior executive of SCCC who join us today. First, Mr. Aiden John Lynham, Group CEO. คุณรันจันทร์สัตเดวา Group CFO and คุณมนตรีนิธิกุล CEO Thailand Cement Business. My name is Salin Tiyompawat, Head of Accounting Group Consolidation and IR. And today our presentation will cover main agenda, starting with the key business highlight, financial performance, ESG 2023 outlook and way forward. After the presentation, you have Q&A session that you can check any question in the chat box and go through after the presentation. So first, I would like to invite Khun Aiden to share the key highlights of our business in the third quarter.
Sounds good. Thank you. Welcome, everybody. It's a great pleasure to be here, and thanks to the SCT for setting this opportunity day up, and thanks for all of you for giving your time to be here. Just setting a bit of a context about our performance in Q3 and to reflect back where the past year has got us to. So we have, amongst other players in the industry, been exposed to a very high surge in inflation, which came through from 2022. That has had an impact across the whole region, actually, on demand. And central banks had reacted to this inflation surge. Interest rates have gone up. In certain cases, controls on liquidity and credit. All of this then leading into some erosion of demand. So we will get into the details in a moment, but we need to keep this picture that we're kind of coming, I would say, out of a tsunami effect of this inflationary surge, which rippled everywhere, including into China, which failed to open up as much as we had anticipated after its zero COVID policy had been stopped. So we have a lot of things still coming through into our numbers in quarter three. And if I give you some of the highlights on a country by country basis, I can tell you that in Thailand, in spite of this, of the tsunami and the effects of inflation, the demand has held up rather well. Infrastructure spending had been set in gear and remained pretty solid, even though there were elections, etc. And we'll come to that when we talk about the outlook, because that may have a consequence for next year because of the delayed budget. But otherwise, spending on the infrastructure side tended to buoy up demand. There were issues, however, in Vietnam during the quarter, which was a continuation of the effect of a collapse of the bond market, especially where the real estate sector is concerned. And this affected our demand. We'll come to that when we talk about Vietnam. But a double-digit drop in demand in Vietnam has to be faced by all the players there, including ourselves. Q3 saw a continuation, maybe a bottoming out of the situation in Sri Lanka. Many of you will be aware of issues which started in Q2 of 2022, a sovereign foreign exchange crisis. And the demand is still bumping along the bottom, although showing some green shoots of recovery. So as I said earlier, the tsunami of inflation has abated or shows signs of abating, and in particular energy costs. We've seen energy costs coming back down, not to the levels they were before they took off, but at least there's been a softening of energy prices, which we were able to take advantage in. And of course, the erosion of demand, coupled with the high cost of inventory units, in particular energy units like coal, etc., left us with a lot of inventory, which we are successively by quarter, working our way through. So Q3 sees a recovery in our cash flows, softening in demand, but we're able to hold up our EBITDA. And we've got some good news from our group CFO. Our position of cash is pretty solid, even after paying down around 2.6 billion baht of short-term debt. So we're taking care of our balance sheet as well. Khun Montri, our CEO in Thailand, will talk to you about a program we've launched there. But we've launched a program in every part of our group as well, overseas also. But Khun Montri will give us an overview of the Fit Plus initiative. And a lot of the outputs of that initiative have led to a very good performance in Q3 and an upward climbing level of performance going into Q4 and 2024. We've continued on our ESG journey. Our efforts to lower our substitution rates are continuing. We just breached the 20% mark across the group, and also in reducing our clinker intensity, so our carbon intensity in cements has seen a step change, and we're about 4 to 5 points improved. So we maintain, even through these pressed times, our ambitions of lowering carbon and keeping a long-term view in mind as we adapt to short-term needs. So without further ado, you're all waiting to hear what happened in Q3 from a financial point of view. So I'll hand over to Mr. Ranjan, our Group CFO. Ranjan.
Thank you, Adrian, and good afternoon, everyone. Overall, if we look on this slide, the left-hand side shows the development of top line, the revenue. It's lower than last year, same quarter, because as we mentioned earlier, the demand has been softening, particularly in Vietnam, and also for Thailand, our clinker exports are much lower than same quarter last year. Together with lower prices in Sri Lanka, which continues to develop, but the struggle is still there. Overall, the revenues stand at 10.2 billion baht, 6.5% lower than the previous quarter. In terms of EBITDA, our fixed cost base has been reduced in the first 3 quarters. As you heard from Adrian earlier, we focus this year on restructuring as the demand is lower. So there is also an impact on one-off costs, but despite that, Q3 EBITDA was higher, coming primarily from lower both variable and fixed costs. In the Q3 result, there is also a one-off cost, primarily from Vietnam, which is restructuring cost. If you add that back, normalized EBITDA would be around 2.1 billion. Net income continues a positive trend. You see a little lower net income in Q3, 441. This is primarily due to one-off costs above the net income line, and also in the net income line, we took the opportunity to write off or impair certain investments that were made primarily in Sri Lanka to expand our capacity. And with the current trend that we see, those investments may not be required, and hence the pre-operating expenses or feasibility studies which are lying in the balance sheets have been impaired in Q3. So for us, we have used sort of a crisis situation in the first 3 quarters in Vietnam, Sri Lanka, also Thailand when it comes to export markets. We have used this opportunity to make ourselves fitter. Montri will talk about it a little more later. So our overall FTE capacity, fixed costs have come down in these 3 quarters, and we'll reap the benefits going into next year. On the financial performance relating to our balance sheet and cash, as you can see, Q3, Adrian also mentioned, we had much better free operating cash flow or internal cash flow generation, which led us to settle all our short-term borrowings we did in Q1 and Q2. So, and Q3 ended with a very healthy cash balance of 2.3 billion. Summarizing the balance sheet, as you will see, end of September 23, because of better EBITDA performance and net income performance, most of the financial indicators look better than June 23. Also, in some cases, better than December 22, or getting back to where we used to be before the inflation set in Q2 last year. The one good point is our gearing is moving in the right direction, below 60% already, and going towards our strategic goal of around 50%. In terms of liquidity, as I mentioned, we are sitting on a good cash balance with no short-term loans to be repaid rest of the year. In addition to that, we have secured committed credit lines of 9 billion baht since 2021, and we haven't used them up to now. So overall, we don't see any concern on the liquidity. We have one of our bonds maturing in Q2 next year, for which we don't see any challenge. On the dividend payments, this slide covers the trend from the last 4 years, and as you will notice, we have remained pretty consistent with our giving the dividend back to shareholders at 9 baht, 8 to 9 baht. 2019, 2020, they reflect back the COVID situation and the risk of liquidity, etc. But other than that, we have been pretty consistent. Even though 22 performance was below everyone's expectations due to very high energy prices, we still maintained a very long-term good view on our industry and our own initiative that we are doing, and we paid a dividend of 9 baht in this year as well. Okay, so we will now present to you the financial performance by our geography. So the first one is Thailand, and I request Manthri to present this slide, please.
Yeah. Thank you, Khun Rajan, and good afternoon, everyone. So I think let's start with Thailand performance. Looking at first for the demand, the domestic demand, for both cement and also the ready mix, and other construction materials. I would say that in Q3 the demand was good, and this is compared to the previous quarter as well as last year Q3 as well. But then looking forward in Q4, so we can see quite soft demand. This is mainly because of the delay or the budget approval from the government, and we can see as well in Q1. Perhaps we will facing the same situations where quite soft demand, in Q1 until the budget approved, in May next year. So that will help, to boost up the demand, later on. For the price wise, we can see that, in Q3, EDC or SCCC able to maintain our good level. So this one you will see the result later on, in the slide. But what I try to say is that overall revenue for SCCC Thailand, in Q3 is good. It was good, but just because of we reduced the clinker export. So that's why when you observe now the revenue when compared to Q2 last quarter, so drop around 7.5%. And when compared to last year Q3, so drop around 3%. But in fact, if you consider only the domestic revenue alone, in fact, this improved quite significantly. And as a result, you will see EBITDA and EBITDA margin. So we improved quite significant, compared to Q3 last year. It was double, almost double, 94%, and compared Q on Q, so still improved 18%. This is thanks to the team, the effort, and also the initiative from Fit Plus project. So you will see later on the Fit Plus. This is I would say this is more on the turnaround project, and Fit stand for first F, fitter organization. I, this is improve the bottom line or the EBITDA. And T, this is on the transform to perform. So we encourage, our team, to have the agility mindset and also, create the activism, mindset to the team. This is to promote a culture of sustainable performance and improvement. So we came up with 3 themes you see on the slide. The first one, looking at the top line, growth and protect the top line. The second one, to improve the variable cost of the production. And last but not least, we focus, to manage on the fixed cost, or the structural cost. Let's go one by one, for the top line, growth and protect our top line. So we came up with 2 focusing. The first one, we sharpen, our pricing strategy. We go market by market, looking at the micro market and then to maintain and to protect our deserved market share. So with that, we able to maximize our profitability. So we balance both between the volume and also the price. And we invest, on the technical support. We invest our number of the engineer. This is to help our customer of the customer. We're looking at the details, at the small contractor to medium, and also looking at the retailer. This is the customer of our customer, so that we able to support in terms of the demonstration and also give the better service. So with this also improve our price level, in the good position. The second one, on the variable cost, and as long as the CO2 emission is concerned, so this is the benefit for both, reduce the CO2 as well as we also able to reduce our variable cost. Critical factor optimizations, I will show you in the next session that how best that we put the effort and achieve our target. TSR, thermal substitution rate improvement, we also be able to improve from 11% as a group from 2020. Now almost 20% we achieved in the first 9 months of this year. Thermal and electricity consumption as well. This is a key area that we try to reduce our cost further. And we just implement the lowland coal utilization up to the maximum level. We aim for 60% of this lowland coal. So that will help and improve our variable cost as well. And the last one on the structural and the fixed cost, we very much focus on the right sizing of organization, make it fitter. And this is more agile, and respond to the customer. For example, we do the streamlining of the procurement and the manufacturing team. So this is let them have the same target and then move forward to reduce, the fixed cost further. And also we just combine the logistic team together with the commercial team, so that we'll concentrate more, on the customer requirement, put customer in the middle and everyone, support. So with this kind of agile mindset and collaboration, so that's why you see already, on the better performance in Q3. And I do believe that this one will deliver, the better performance in Q4 as well. Thank you.
Thank you. So let's move to Vietnam. As already mentioned, we saw a massive reduction of demand in Vietnam, working from the bond crisis last year, and overall general sentiment towards buying goods and services, different sectors saw the same. So if you see our revenue on the right-hand side from compared to same quarter last year, the revenues have dropped nearly 50%. It's more than half is coming from volumes, and also in a shrunk market, all competitors want to have their share of wallet, and we saw declining prices in Vietnam market. In terms of profitability, Q3, you see much lower EBITDA compared to Q2. The reason for that is one-off costs which have been provisioned for restructuring, primarily severance pay, for making the organization leaner and stronger. Sri Lanka, in terms of the demand, and it continues to inch up month on month, quarter on quarter, not massively, but on the back of the funding and improvements done by the government together with IMF, the demand starts to come back. However, the recent installation of new capacities in Sri Lanka, you can see on the left-hand side chart, the gray zone, the capacity has gone up, the demand has gone down. This is quite an unusual scenario for a country, for any country for that matter. In terms of profitability, we saw a poor Q3. It's primarily coming from lower volumes, lower price, but also making a provision for restructuring expenses, making the organization leaner and fitter for coming years. Bangladesh have had a good run, good performance this year in Q1 and Q2, both volumes and prices sold out market as far as our capacity is concerned, but prices were much better. Q3 is generally a weak quarter because of the rains and lower construction activity. So we saw slightly lower volumes, and also the government introduced an additional duty on clinker, about 700 taka per ton, which led to higher cost in Q3. Cambodia, despite a lower demand and increasing competition, Chitwan AC joint venture was able to hold on the performance to Q2 levels and better than Q3 last year. This is an excellent effort by our JV to showcase go-to-market strategies and work with our dealers and sub-dealers to make sure the market share is maintained in a very highly competitive and a small market relatively in Cambodia. That's all the country-wise financial performance and details. I go back to Mantri to share with us our journey and status on ESG activities.
Thank you once again, Kun Rajan. So, I will walk you through the ESG journey, as a group from INSEE. So we are stretching our sustainability ambition, in 2030 target. So this is another 7 years, right? So we came up with the 3 main indicators, and 3 KPIs, to achieve our ambition. So when you're looking at the first one on the specific net CO2, so initially we set a target was 535 kilogram per ton of cementitious, but now we like to stretch our target. We want to achieve lower than 470 kilogram per ton of cementitious. So to achieve this kind of target, you need to bring down the clinker factor, to the 65% level. And in the meantime, on the thermal substitution rate, that one have to achieve 40%. And to achieve that thermal substitution rate target, so we need to plan for the waste volume, the process waste volume for the future. So we stretch our target from 1 million tons in the beginning. So now we aim for 1.4 million tons. And this is also, we try our best, to use the byproduct. So I'm talking about slag and also fly ash. In the beginning, we set at 1.4 million tons, but now I think we like to achieve up to 1.7 million tons. So that our ambition target. And next, please. So when you're looking at the CO2 emission reduction, so we came up with 4 themes. So this is more on the details, how we're going to achieve those target I'm talking about. So the first one, we very much focused on our green portfolio, the product. When looking at the product now, we implement and also launch the new product where friendly to the environment. So Thailand as a good example where we able to convert the bag OPC to the hydraulic cement now 100% for the past 4 years. And also we are very much focused to convert the bulk cement product from OPC to the hydraulic cement as well. This year we aim for achievement up to 80%, and next year we're gonna achieve 100% as a target. And as a TCMA roadmap, we gonna reduce CO2 1 million ton within this year. Proud to say that we contribute around 40% this year. Yeah. The second one on the green energy, as I mentioned about the TSR, so the co-processing of municipal and also agriculture waste. So in our cement plant, this is to mixing with the coal or the fossil energy. So we aim for 40%, by 2030. And last but not least, on the green innovation, we invest, our CapEx, and then we go for the new technology, a separate limestone grinding. So with that, we able to reduce our clinker factor further. And in the meantime, we able to control our good quality and very consistency quality product. And next one, this is more on the outcome. You will see at the right hand side, the graph is show already that we as a group we able to improve our TSR from 11% in 2020. Now in the first 9 months we achieve already 20%, or this is 83% improvement from 2020. And as I said, by 2030 we aim for 40% of the TSR. And to achieve this one, we were not looking at only RDF alone, but we also looking for the biomass to blend together and to achieve this 40% target. Last one on the clinker factor, I think similar progress on the TSR as well. So we able to reduce clinker factor further. You may see on the graph, 75% in 2020. Now in the first 9 months, we achieved already 72. And by 2030, we aim for 65%. So this is the effort, by the new investment on the separate limestone grinding together with the sales team convert OPC product to hydraulic cement. That's a snapshot for the ESG journey. Thank you.
So I guess all of you are waiting to understand what's next after that, after having gone so far as the end of Q3. So this is titled the market outlook for 2023, but actually it brings us into 2024 as well. So across all the countries in which we are operating, we see broadly a recovery. In Thailand, the Thai economy is expected to improve, and especially on the back of the tourist revenues which are returning, and the government of course has pledged to invest more in the economy. We still have to wait for the budget early next year, but we are expecting that will feed through into our business also, especially where infrastructure investments are concerned. So we see holding the line, I would say, on the top line in Thailand, but all the time a softening of our cost curve due to an abatement in energy costs, be it on the thermal energy side, even lowering of retail, so diesel oil prices which we use in our transportation. And electricity costs have been down, so the fixed tariff, as it's called here in Thailand, is down, and there's a good chance that will stay low as well, as the government keeps it low as far as it can to support economic growth. So we have a softening of the cost side, a widening of our margins. You've heard from Ranjan, our margins are showing good signs of recovery. And in Thailand, we think that the top line will hold. Might be a little bit softer in the first quarter, maybe the second quarter, but then we'll see it stronger than other years in the second half of the year. Where Vietnam is concerned, although we've had a major slump in the overall market in southern Vietnam and other parts of Vietnam also, but in particular the markets where we are operating in, that's part of our reactions have to redouble our efforts to penetrate the market further, and we've managed to regain market share. So we expect to recover possibly between 25-30% of the volume going into next year, off a low base, but a recovery nonetheless. We've already taken large measures in Vietnam on cost efficiency. We intend to hold them, and also we will enjoy a softening of the energy price, the thermal energy price there as well. So Vietnam, definitely a rebound is expected. We may still have to wait even through late parts of 2024 to see it coming back to where it was before the slump hit us at the beginning of 2023. In Sri Lanka, small green shoots of recovery, a lot of support from the IMF and other governmental initiatives there, which is helping the country and national demand to get off the bottom. We are expecting some issues on the exchange rate, maybe not a further collapse, but as the importation starts to open up, as GDP starts to turn up, there will be pressure on the currency. So we are taking a very close attention on that as well. But we are expecting also on the cost side of the curve, the cost of our imports in terms of materials like clinker and slag, etc., to soften. So all in all, I would say in Sri Lanka, looking forward towards the end of this year and into 2024, a recovery, albeit modest. In Bangladesh, inbound remittances have been on the low side. That's put pressure amongst other things on the currency there, although not a collapse in any way, in the same way as in Sri Lanka. Demand has held up, and we expect there's an election coming up in the next month or two. We're expecting the demand to rebound into 24 following that election. And we'll also be able to take advantage of lower inbound clinker prices as well into that market. Then in Cambodia, well, you saw on the previous slides, what used to be a 10 million ton market is now an 8.2 or 8.3 million ton market. That may drift a little bit down towards 8 million tons, we think, so a softening of the overall market. However, we've been able to recover or to build market share there. So our volumes will be largely flat in an overall kind of further slumping market there. And during 23, our efforts on increasing cost efficiency, reducing our variable costs, our restructuring efforts, as in other parts of our group, have been done also in Cambodia. So we're expecting our performance to be quite good for the rest of 23 and into 2024. So that's the wrap up of the market outlook. Now, I think we've presented a lot, but I'm sure there's lots of questions from your side. So we could open the floor. Myself and my colleagues here will do our best to address your questions. Thank you.
Thank you, Khun Aiden. Next, come to Q&A session. There is some questions submitted, so let's start with the first question. Question is related to the target next year. What is the revenue growth target for 2024, and which country do you expect the majority of this growth to come from?
So just broadly speaking, next year we see a recovery on our top lines. I don't want to cause a misunderstanding to say that it's going to bounce back in a V-shape, but certainly there will be a strong rebound in Vietnam, and we will continue to come up from a very low base in Sri Lanka as well. We will grow our profitability from an improved revenue line. in 2024. The programs we have launched, of which Kun Montri has given you an example of Fit Plus, they are detailed programs with the target of turning our performance around. We were quite proud of our performance going into this, but we don't sit back and sit on our laurels. So we have sharpened our performance again. So on the back of improvements in performance going into the culture which our employees are operating, we see a profitability improvement going into next year. We also see our performance on conversion of cash from operating EBITDA further improving. You'll hear Ranjan can comment on our turnaround of cash flow rates as we bring our inventory levels down and bring our control of net working capital to much sharper ranges. So we basically see a good, probably single-digit recovery on revenue, and that will flow through to the midline and to the net income, and definitely our cash flows are likely to improve. We finished this year at gearing around the 50% mark, probably a hair's breadth below 50%. And we will continue to de-gear our balance sheet through 2024 from these cash flows, and we will be ready for our next step for growth. And that's what we're doing. We protect the balance sheet to make sure that we have strong cash flows, which are able to pay a sustainable dividend to our shareholders and have a very solid balance sheet for the next round of growth, which will come in the next few years.
Next question related to Sri Lanka. The cement business in Sri Lanka has worsened this year, both sales and profit margins. What is management outlook on the cement business in Sri Lanka for fourth quarter 2023 and 2024?
Okay, 2023, the demand is down, but it's bumping along the bottom. Our profitability has been down, as Kun Ranjan has explained, due to some impairment activities and clearing out of the balance sheet. We also had some inventory, which we had to move very quickly into the market because the demands had abruptly wound down in the latter part of 2022 and into 2023. However, as we've already explained, Sri Lanka is starting to come up, let's call it, from the canyon floor. There is inbound investment, which is facilitated by the rounds with the IMF. Also, other foreign investors into the country seem to have come to an agreement with the government there. So you'll find some modest capital inflows, and that will all percolate its way through into demand for our products. So the revenue line will improve in Sri Lanka. We have definitely restructured a lot. So we have, capacity adapted to the reality of where the demand is. And I would say 2024 will be a gentle kind of recovery in our profitability. Certainly the bottom line will be better because we have already taken some restructuring hits, one-off hits and impairment adjustments in 2024. So in Sri Lanka, 2024 will be an improved year compared to 23, and especially compared to the second half of 2022.
Next question related to Vietnam. Perspective on the cement business in Vietnam in fourth quarter 2023, and what positive signs are beginning to be seen, and in what area in Vietnam performance is expected to improve in fourth quarter?
Okay, look, on Vietnam, I think we should keep the big picture in mind. The underlying strength of Vietnam is there. This is a population which is younger than most in the ASEAN area. It has over 100 million people. The kilo per capita rate of consumption of our products is remaining high. What's happened has been a matter in the bond market, especially in the real estate sector, and this has been compounded with a drawback of availability of credit an intervention by the central bank on inflation. Now, this has emanated to other parts of the economy. So the government is staging a concerted action to turn things around. This will feed through into our performance also going into 2023. So we will see and we are seeing a reduction in interest rates. We are seeing a re-injection of availability of liquidity, and this will feed through not only into our industrial cements in the real estate and the project side of the business, but also into the retail side. So we are already seeing more availability of credit to the retailers who take their credit from the distributor layer of our channels. So the government is going through a kind of a stimulus arrangement to jolt the economy back into a better state of health, and we're going to feel the effects of that. We're seeing the green shoots of it, and we'll see the effects of that going into 2022. And we're expecting our volumes, at least top line, to recover between 25 and 30% in 24 compared to 2023.
So we have 3 minutes left. Maybe the last question. If you have further question, you can reach out to our IR department. Last question is about the investment. How much is the total investment budget in 2024, separate in general CapEx and project CapEx, or maybe in overall, you can share the idea.
Yes. So the CapEx in 2020, first of all, the CapEx in general, we have 3 categories of CapEx. We have maintenance CapEx to sustain our operating assets. Then we have rationalization CapEx to improve efficiency and cost of production. And finally, expansion CapEx. So the bigger part is usually the maintenance CapEx, given the nature of our industry and the assets that we deploy. The maintenance CapEx is decided using a framework called guide values. Guide values for cement and for clinker and cement, we have experience from the past 20, 30, 40 years, and we can predict based upon the age of the equipment, $ per ton of clinker capacity, $ per ton of cement capacity. So we generally use these indicators for budgeting our maintenance CapEx. Next year, 24, this maintenance CapEx will be lower than 23, considering the capacity adaptation we have done in each of our operations in Thailand, Vietnam, and Sri Lanka. Rationalization CapEx is almost close to 0 because we want to use 24 to stabilize our operations with a restructuring that has been done in 23 and focus on regaining our market shares and jump and get a boost to our bottom line. Expansion CapEx, we do not have major expansion CapEx. We are still working on our expansion in Vietnam, Hong Kong Line 2. We are in the process of obtaining required construction permits and environmental licenses, etc. As soon as we obtain those licenses and permits, we will break the coconut and start the project. But this is, as of today, it is foreseen, if not foreseen, to start earlier than Q4 next year.
One quick question, the last question, very quick. In the fourth period, 2023, how many cement kilns will be shut down for maintenance?
Yeah, we had we had 5. I think we had 2 in Q2 and 3 in Q3.
Okay. I think we cover most of the question, or if there are any questions, you can reach to our IR department. And thank you very much for today, and hope to see you next opportunity day. Thank you very much. ขอบคุณค่ะ
Thank you.